Hi, this is Julia C. Welcome to 408 Home and On. In the beginning of the month, on the 6th of each month, we're going to use Redfin data to share with you our six counties in the San Francisco Bay Area, the active inventory, as well as the demand, the pending sale, and of course the price. But this month, we're going to go over a couple bills that we recently passed and what is the impact in real estate. So the first one, everyone knows about it, is the big, beautiful bill, which is passed in a couple of days ago. Now, I'm not going to go to the detail. I'm sure that you already know all about it. I just wanted to pinpoint a few impact on the real estate. Now, the first one, do you believe this bill will increase in the job? In real estate, job is very important. If it's more job, the more people buying. And is it going to affect the interest rate? Is it going to be making the home more affordable? So that would affect real estate. So this bill, the big beautiful bill, uh, overall will lower the tax rate for taxpayer who making at least 18,000. So it kind of increasing the take home pay. So that will help tenant as well as the buyer for the small you know, increasing. Some people might move from apartment to a condo or to a townhouse to a house for renting, so that will help a landlord if if you're an investor looking to buy a rental home, that might increasing the tenants, right? And then also with the lower tax rate also help aspire to get more like higher payment, take home payment, and that will increasing the affordability a little bit, right? And then another one is this big bill also allow the company, especially for those investor using like LLC as corporation or a partnership, those tax rate are cut a lot, and that will help them also get more income. And this big bill also allow the corporation to wipe out like initial investment uh, in equipment, right, or research on the first year. Like if you are investor, you each for residential, you have 27.5 year for the depreciation. But this bill allow 100% bonus depreciation if you're investing on the first year with the uh, like a home improvement on the house, on the appliance that you're buying. So that's 100% bonus appreciation that help a lot to some people. Um, However, this bill also increasing the debt ceiling, so the government has spent more money. The point, if it's correct, that they're temporarily increasing the debt, increasing the debt ceiling, so they can lower the tax, make the company hire more people, create more job. Hopefully, eventually, will pay off. And people have a more job, and company have making more money, and they will be boosting the job market, and eventually they will get back the tax income. So that's the help in terms of a job. Now, what about the interest rate? If the bill successfully create more job, and then there's no point for Fed to lower the interest rate. So the interest rate might stay high for a while. So that's the one negative. Now, regarding the affordability, we already know that the tax bill lowered the tax rate and people getting more take home pay higher, so that affordable a little bit high improvement. But the another one is the California law. Um, there's a California Environmental Quality Act law that's been for long, long time. We call it CEQA law. This one for a builder, if you want to build a home on a land, first you have to do a research on the land, on the environmental impact in that area. And would it create more pollution? Would it building a house will scare some animals and some birds away? So you do a lot of research on that. That's a very costly and lengthy study on the environmental. So it would take a longer, right? So now California weakened this law that will help a builder build the home faster, at least less, uh, reducing this environmental study, so that will help them making a more uh, building quickly, and also they spend less money on the builder. They hopefully they will pass those more affordable home to the buyer. So that hopefully will help easy some of the inventory if they build more homes. But again, this is not going to be impact like in tomorrow or the next day. It's probably going to take a couple years to see the result. But nevertheless, it still is helping California in terms of shorten the inventory. So that's a quick overview regarding the job market, the rate, and then the affordability for the impact on the housing. So let's go to the Redfin. First one, we're looking at the Alameda County. The blue line is 2025, the red line 2023. The yellow one is 2024. So the data is up to June 29, just about a week ago. So what you see here, the new listing, looking at the chart in the Alameda, the peak new listing was May 18, and it has been dropping in terms of trend. And now the overall active inventory also dropping a little bit, but it's still a lot better than last year, like 19% more inventory. What about the pending sale? Pending sale will kind of indicate the demand for the housing in the county. The pending sale it's actually negative 13% compared to last year. And the price is between the 2024 and 2023 now, but it's down 6% from the same year last year. Um, Now let's look at Contra Costa. New listing is also dropping. It's down 6.7%. And then the overall inventory is stay on the top, 31% more than last year. Pending sale, the lowest compared to last 2 years. We're down like 8% compared last year. And then the price is also the lowest compared to last 2 years, but only negative 1%. Marin County, same story. A new listing drops sharply, and then overall inventory it's also stay on top, 17% more than last year. Pending sale is about the same. Actually, it's down like 1.7% compared last year. So it's not bad for the Marin County. The overall price is also down 5% compared last year. Now look at the San Francisco. A new listing, it's also lower, down 11%. And then overall, new active listing is down 2%. And then pending sale, it's better than last 2 years. So actually 6.2% better. So San Francisco is the county that has better pending sale. And then the median sales price also up 3% compared to last year. Now, San Mateo new listing is also dropping. And then the active listing is stay 5% more inventory. And then pending sale is about the same as 2023, but it's down 5% compared last year. And then the price is the same as 2024, actually. But it's the trend is heading higher for the year. And Santa Clara new listing is also dropping sharply. It's 19% dropping. And then active listing is also going down, but it's about 4% more than last year. And pending sale is below last 2 years. It's down 17% compared last year. And then the price is 4% higher than last year. But it dropped a little bit from the main 11 and then now it went up a little bit. So that's our market for from Redfin. In the 20th of each month, we're going to go over using the MOS data, the 26 city in our area. So if you're in the market, don't miss it. See you next time. Bye bye.